Hey guys, it is Julie here with JT Wealth. In today's video, we are doing a long overdue update to our dividend investing series, where we are investing a small amount every single week in the goals of creating a $2,000 per month passive income stream. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are doing an update on our dividend investing series, where we are creating a dividend-focused portfolio using M1 Finance. Now, if you're looking to start your own M1 Finance account, make sure to check out the link in the description down below. In today's video, we're going to be going over our dividend investing series and taking a look at the current holdings in our M1 Finance portfolio and how each of those stocks are performing. I'm also going to go over the frequency of our dividend payments, as well as a few things that I look at when selecting a dividend stock. Right before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to check out the TipRanks YouTube channel for my daily pre-market morning update, where we're bringing you everything you need to know before the market opens. Now, for any of you who might be new to our dividend investing series or maybe just need a refresher, this is an account that we are investing $50 every single week into. Now, we're focusing on dividend paying stocks with the goal of creating a nest egg that eventually will be paying out over $2,000 a month in dividends or passive income. This is income that you earn every single month without having to do anything. Now, this is not a get-rich-quick kind of plan. Rather, it is a slow and steady investment plan, showing you the importance of not having to have thousands of dollars right away to invest, that starting out with $50 per week can accumulate very quickly. The most important thing, no matter how much money you have to start investing with, is to create a plan that is consistent and stick with it. So for this dividend portfolio, we will be investing that $50 per week for the next 25 years. This will give us a nest egg of approximately $400,000, which we can then comfortably draw off $2,000 per month in dividend income. Of course, if you have higher goals or want a shorter time frame, you can always adjust how much you're investing, as well as how aggressively versus conservatively you are investing it. All right, now with all of that being said, let's take a look at our dividend portfolio with M1 Finance. Our current value sits at $2,567.62. That portfolio has seen a gain of $522.99, which works out to a money-weighted return of 53.92%, so extremely happy with those results. Within this portfolio, I currently hold 12 different dividend-paying stocks. Now, I've kept it at that amount just so it doesn't get too unmanageable. Once we get up another $1,000 or $2, I'll maybe look at adding in some different stocks as well, but I'm pretty happy with our mix so far. And I'm also very happy to report that all 12 of our holdings are well in the green now. When we used to do these updates a few months ago, even longer, we always had a mix of some that were in the red versus the green. But it's all green today. Our holdings include Shaw Communications under SJR, Coca-Cola under KO, AT&T under T, the Invesco S&P 500 High Dividend Low Volatility under SPHD, Realty Income under O, Navient Corp under Navi, Pfizer Incorporated under PFE, AbbVie Incorporated under ABBV, JP Morgan Chase under JPM, Cisco Systems under CSCO, Walgreen Boots Alliance under WBA, and 3M under MMM. Our top performers include Shaw Communications, who's up 124% for me, which is pretty amazing considering Shaw was one of my worst performers for a period of time. Our best performer overall is Navient Corp, who's up now 136%. And our worst performers are still performing quite well, with Coca-Cola up just over 10% and Realty Income over 12%. Now, all of these stocks are actually up considerably more than I ever anticipated them to be. It's really interesting to see this account be all in the green, given the big sell-off of some tech and more overvalued stocks these last couple of months. This is the only portfolio I hold currently that everything is in the green. And I think this really goes to show the importance of having that diversification and having a portfolio that is focused on some more of these boring but solid companies. They're not going to necessarily grow as exciting as some of those tech or speculative companies, but they're going to be slow and consistent and a bit more hedged against big volatility. Now, when it comes to dividend investing, a lot of people will ask about the frequency of those dividend payments. Especially if you're going to be drawing those dividend payments for income, you want to have them coming in on a consistent basis, so obviously you can pay all of your monthly expenses. Now, personally, we're at the beginning of this dividend portfolio, so I'm not too worried about the frequency of those payments since I'm not drawing any income yet. But I was curious to see what kind of spread we had on those payments, so I did make a little chart. And it turns out that our dividend payments are fairly well spread out. There I have Q for quarterly frequency and M for monthly. So you can see at the bottom we actually have 3 stocks that are paying out dividends every single month. Now the others are paying out quarterly, and again, we're pretty well spread out. I have a couple in April, a couple in May, a couple in June, 1 in July. So as we get into that quarterly rotation, we should be having dividends coming in every single month. Now, the big thing with those dividends coming in is to make sure that you've set up a dividend reinvestment plan, or DRIP. This means that as those dividend payments are coming into your investment account, they're going to automatically purchase more of the stock that they came from. This is going to help you magnify your compound interest and really see that account start to grow over the long term. To see the effects that dividend reinvesting can have on your portfolio, I found this chart of the S&P 500, where in one scenario, you're just taking those dividends out, and the other, you're reinvesting. Now, this is looking over a 57-year period, so it is quite a long time frame. But you can see the huge difference in the final amounts. With no dividends being reinvested, your $10,000 would be worth $460,000. But had you reinvested all the dividends you received along the way, it would be over $2.5 million, so quite the notable difference. Now, when it comes to selecting a dividend-paying stock, a lot of people get hung up on the dividend yield, simply thinking that bigger is better. But as we know, that is not always the case. Keep in mind that the dividend yield is merely a percentage of the current stock price. So if you have a $10 stock with a 10% yield, that's going to be a lot different than if you have a $100 stock with a 10% yield. And in a volatile market, if your stock is to go down in value, then your dividend yield is going to appear to increase. However, you're not actually making any more in dividends. So while the dividend yield can help you understand the dividend in relation to the stock's price, it is definitely not the only metric you want to be considering. You need to pay attention to the actual dividend rate, which is the dollar amount actually being paid out to you as a dividend. Another thing to consider is the payout ratio, which is how much of a company's earnings they're paying out to the shareholders. The biggest thing you're trying to determine here is if that dividend is maintainable. So an easy way to check this out is to see their historic dividend payments. How long have they been maintaining them, and have they been increasing them regularly as well? This means a great place to start is looking at dividend kings or aristocrats. These are companies that have been paying for either 50 years for kings or 25 years for aristocrats and increasing their dividends every single year. Companies that are included in the aristocrats and kings have shown that they are extremely consistent and reliable with their dividends, especially during hard times in the market. Given the pandemic this last year, we saw a lot of companies have to cut or slash or decrease their dividend. So companies that were able to maintain it over difficult periods in the market are definitely ones you want to consider. So that is our update of our dividend investing series. Just getting you up to speed with the goals of our account, our current holdings, and what I look at when picking a dividend fund. Now, you guys know I always love hearing from you, so make sure to leave your thoughts down below in the comments. Are you following along with this dividend investing series, or what investment plan do you currently have set up? Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision always needs to be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to head over to the TipRanks YouTube page to catch my pre-market morning update every single day before the opening bell. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.